This is the second quarter market report for 2017 for Southeast Michigan. And what we saw in the second quarter of this year was about the same flow that we saw in the first quarter, which was a surprisingly strong market, stronger than we had anticipated. We saw, if you break the market up into sort of the three segments we typically talk about, the under 250, 250 to 500, and 500 and above, they did act slightly different. The under 250, which is the majority of the market for Southeast Michigan, sales actually fell about 17% in that category. Again, that's because inventories fell about 27%. So without properties to sell, you're not going to have as much sales. Values, of course, however, jumped about 8%, which is not surprising. You have that tight of inventory, that much excess demand, you can see values rise quite a bit. And days on market, of course, fell under 20 days. The month's supply of inventory for the under 250,000 market was about 1 month's supply, about 30 days, which is as low as we've ever seen it. So that market segment is very strong. If you're in that market right now as a buyer, you know you're frustrated. As a seller, you're probably smiling, you're getting a lot of activity. 250 to 500 range, again, as the prices move up, the activity modifies, the market is a little skinnier, there's not as much activity. So in that mid-range, 250 to 500, we're seeing, again, inventory shrunk a little bit, but not by much. Home sales rose about 8%. In the over $500,000 market, that is acting the most different from the rest of the market. Sales jumped quite a bit. But so did inventories. They rose a little bit, so we think that was a result of just more things to buy and activity in the marketplace. But again, that market's pretty thin, so it doesn't take a lot of change to have sales jump a lot. But what we didn't see is that the values didn't change a lot, whereas they were up about, as I said, 8% in the under 250, about 5% in the 250 to 500. They were flat to actually down a little bit, depending on areas. For the over 500, month supply of inventory is still at around 6 months supply. Overall, we can expect this tight inventory market, relatively speaking at all price ranges, to continue for some time now. We'd expected it to release a little bit and have more inventory release, but as it turns out, that release is going to be a lot slower than we anticipated. It'll be more like a slow balloon release as opposed to a blown pop. So we can expect over the next few years, we can expect the same issues of tight inventories, particularly in the lower priced ranges. And therefore, buyers need to get ready for that and used to it and just act rather than waiting for homes values to modify. They're going to continue to rise. We're just now getting to home values prices that we were at the previous peak, 2005. So the market clearly is not overvalued in every price segment. So as buyers jump in, as sellers be patient and be aware of where you are in those price points. Seller in the 150 price point versus 350 versus 650, each has different marketing strategies and approaches to the market. Overall, good market. We're going into the late summer and fall with some great momentum.